Let's focus on Adani Power. It soars over 25% in the last 6 months. And why is this a big turnaround? And what is this big turnaround story, in fact, in the making? Hiral joins us with a complete picture.
Thank you so much for that. It's an interesting move that you're seeing with regards to Adani Power. 25% up move in the last 6 months. Is the tide turning? That's the key question from here on. You know, in fact, it seems like the India's biggest turnaround story, which is in the making. Let's quickly understand why. Between FY14 to 21, the company actually reported a loss of around little over 12,000 odd crores. But that turnaround has started since FY22, where between FY22 to 25, they've reported a profit of nearly 50,500 odd crores. Now, from here on, if you see in terms of the guidance that the company has given, they're suggesting a bigger story that may still be in the making. If you talk about the guidance as well, an EBITDA of almost around 70,000 odd crores is what they're looking at in 6 years, which is only implying a 25% compounded growth. From there on, if you see the scale of the company, the ambition is staggering because they're looking at capacity expansion, wherein they will be implementing 24 gigawatts of new capacity in the next 6 years. And what this means is it takes the portfolio to nearly 42 gigawatts. That's what we're talking about from here on. The capex is around 2.4 lakh crores for this expansion, and they're assuming a ROCE of nearly around 20 odd percent. And on the back of this, the EBIT could actually exceed nearly 50,000 odd crores. In the past 12 months, the company has already achieved orders of around 7.2 gigawatts over the next 12 months. Now, what is the key differentiator for an Adani Power versus the peers? It's mainly the execution, because they have been focusing on faster completion, and that is what is accelerating the break-even and enhancing the project returns. If you see in terms of the timelines as well, Adani Power is completing projects in 3 to 4 years versus NTPC, which is a competitor, which takes nearly 6 years in a similar kind of a framework. And they also have a lot of benefits that come in from the integrated ecosystem. What I mean by this is, if you have to look at the, sister concerns as well for the likes of Adani Enterprise or Energy, they source coal from Adani Enterprises. There is transmission support coming in from Adani Energy as well. And this ecosystem helps them on the execution front as well, giving them an operational edge over peers. So overall, if you talk about the entire journey, very positive from here on. And in terms of the financials, FY25 EBITDA, 21,600 odd crores. The net debt to EBITDA is around 1.4 times, which is way lower as compared to NTPC as well. And the balance sheet has been pretty much strong, providing ample headroom for funding the expansion plans. Simultaneously, if you talk about NTPC, their FY25 EBITDA is around 54,400 odd crores, and the debt to EBITDA margin, that is 4.6 times. So that clearly tells you that the financials are also pretty much reasonable. So that's the turnaround that we're talking about, and the way the tide has turned for Adani Power.
It's quite a comprehensive picture on Adani Power. Hiral, thank you so much for giving us those details. Standard disclaimer, Adani Power is also a part of the Adani group of companies, and so is NDTV Profit. We're joined by Samir Dalal of Natwarlal & Sons stockbrokers on this side of the show. Samir, hi. Good afternoon to you. Your view quickly on Adani Power?
Yeah, so sadly, Mahima, I don't have a view on Adani Power, but your company, your sister company, has obviously done really well over the recent past. And like your speaker was saying, the execution has been good, but I don't cover this company, so no view.
Your quick view on the charts then.
It's a good buy on declines kind of a setup. And every time it comes close to the 20-day moving average, takes support from there and rebounds. Today also, if you see, the lows have been around that level. So yes, the 6-month performance has been very impressive, and has its share of volatility. So every time you get it close to the 20-day moving average, keep your stop losses about 3 to 5% below that, and you could continue to accumulate. But within the stable, I think Adani Port, that one's got a more steady movement, and today also it's seeing some traction. So why not put both of them on the radar?